Yes, it is September, what is it? 16th, Thursday, September 16th. If you don't know, now you do. On Thursdays, we generally do the daily financial news at 7 a.m. That is because it is the one day a week my weekly expert needs to talk at 7:30 instead of 8 o'clock. So I just get up a little earlier for you and get everything done so we can get the daily news show done first and speak with my experts. In fact, I got a lot of phone calls today. I was just looking at my schedule for you. Obviously, the daily show at 7 a.m. I'll be speaking with Jonathan Twomley at 7:30 for 3 episodes. I got a conversation with Millennial Mike at 8:30. Have a call with PropStream at 11. Then I have a surprise guest at 10, 11, and 1. I don't normally do this, but yeah, a lot of stuff going on today for you. So hope you enjoy that. First and foremost, before we get into the news, we got to congratulate two more people. We got to congratulate Suhas. Congratulations for getting your deal. I might be wrong, but I think this is the second one you got of these cards. So congratulations, Suhas. And Lewis, congratulations for getting your deal. Folks, if you don't know what this is, I'm trying to figure out how impactful one rental at a time is. I'm basically saying, hey, if one rental at a time meant anything to you and you close a deal between June 1st and May 31st of next year, I want to hear about it. And I will go ahead and mail you a bunch of these cards. The previous 18 months, we helped about almost 150 folks. So I'm trying to get 500 done in 12 months. So let's see how we do. So again, Lewis and Suhas, your cards will go out this morning. A couple of quick things to note. Yesterday's videos were very important. We talked to Anna Kelly. She had a lender pull a fully approved loan on the day of closing. Yes, that happens. That can happen to all of us. That was an interesting story. And, she talked about it. And of course, she still got the deal done because it was that kind of a deal. Then we talked with Matt, the mortgage guy. There is a lending product being announced or going into effect November 15th that allows you to house hack duplexes through quads with conventional financing with as little as 5% down. There are some income levels. You got to basically be at 80% of the area median income. So more on that coming. If you want to check out Matt, the mortgage guy's channel, I think he has a video dropping today. So a couple of quick things. First off, buy the dip, right? There was a lot of talk of buy the dip, meme stocks, things of that nature. It looks like that has been played out or is being played out as we speak. I wonder if it's because of the unemployment benefits and the stimulus checks going away. But buy the dip moments in July were generally flooded with $1.39 billion total. And then in September, the month we are in, the buy the dip moment got about half that, about $650 million. So again, this is tracking ETFs that generally focus on buy the dip. Again, it looks like a lot of folks that were taking those unemployment benefits and the like were investing in the stock market. I might call it gambling in the stock market, but hey, it looks like that is going on. So another thing going on is FHFA is dropping their 7% loan limit. If you don't remember, about 75 days ago, the whole investing world shook when FHFA basically said they were going to cap the amount of loans in their portfolio for second homes and investment loans at 7%. If you've been watching my channel, we talked about it on the daily news show, and we also talked with Matt, the mortgage guy, and Anna Kelly about that, because we were like, what's going to happen to the investment market? We're going to have less lenders, more expensive, which certainly did happen. Looks like they are dropping that. It's going bye-bye. So you should see some pricing changes, and that is likely what is happening in the investment market, hence the 95% LTV for duplexes through quads. Again, income limits do apply. What else do we got? Oh, retail sales. That was a big number. We talked about three things this week. We talked about CPI. We talked about retail sales, and tomorrow is consumer sentiment. What we are talking about with retail sales, surprise gain, very big surprise gain. There was expectations for a negative number. and it wouldn't have surprised me if it was a negative number. However, it was positive, and it wasn't like positive by a whisper. It was positive 0.7%, and if you take out the drop in autos, it was actually up 1.8%. So a pretty significant move, but it really tracks with what we were seeing from retailers, right? The daily financial news show, we've talked about earnings from retailers, mall-based, online, things of that nature, and most of them, there were a couple of exceptions, were like consumer strong, right? Consumer is back to school shopping was a big play. So it'll be interesting to see if this continues, but definitely back to school was a big driver. Unemployment claims, something we've talked about every Thursday for seemingly seemingly a year and a half, excuse me, up a little bit from last week. Last week was a low for the period, 320. Today was 332,000. So, not continuing the negative downward trend, but maybe putting in a foundation. Something I do want to talk about because inflation is real, inflation is going on. I've been reading a couple of articles about how to fight inflation. And to say that their way of fighting inflation is, I almost want to say comical, is an understatement, right? I want to be kind. So here's the deal, right? This is what all the articles I read in the last 24 hours about fighting inflation. They said, 1, negotiate with your vendors. Call up your cable company, call up your phone company, call up all these people and negotiate a lower fee, a lower monthly fee. 2, postpone big purchases, right? There is talk that this is all supply chain related. So if you can wait, wait. And number 3, cut back. This is supposed to be some kind of earth-shattering news on how to fight inflation. I would typically tell you we can do better than that. I put out a lot of stuff about kind of the Biden economy. I did, I think, an 8-point thing on it last week or the week before. But here's the deal. If you want to fight inflation, you need to secure assets that are in kind of inflation hedges, and you need to secure enough of them so that their increase in value blows away any increase in your monthly expenses. Let me give you an example. If you buy one rental home and it increases in value and rent goes up, which increases your cash flow, it helps, don't get me wrong. But I think a lot of us, if we did the math, we need to get to about 4. We need to get to about 4. If you have 4 and if you have 10, certainly if you have 10 rental properties, you're like, let inflation happen, right? Because your asset will go up, your rent will go up. Yes, your food, your gas, your cable company will go up, but who cares, right? You have the inflation hedge of assets. And again, what have we been talking about? We have been given a gift of low rates. We have been giving a gift of low rates. I think we will have low rates through the year because of what we saw with September, or was it August, job numbers were very weak. I think with what's going on in China's property market, we could actually see lower rates longer than expected, but we need to stay tuned for that going forward. But at this point, folks, do the work. Find a good or great deal. Please get 30-year fixed rate mortgages, and let inflation be a friend, not a foe, right? If you are simply living and bouncing around the bottom, inflation is going to be the largest tax you pay. One of the things I want everybody to realize is inflation is a tax. It is a tax we all pay, and unfortunately, the people that least can afford it will suffer the greatest from it. That's just the way it is. Looks like food prices around the world, rice, tortillas, all these things that are very important for the world, people, humans. Food is up 33% year on year. That is frightening. With some countries up a lot more given their currency devaluation. But yeah, global food prices are up. That's something to watch. That can be very economically unstable. So we need to watch that going forward. Again, what I see going on in the economy is the following 4 things. I believe, number one, we are going to have a couple of years of significant wage inflation. Wages are going to go up. Number two, I actually believe household formations are about to take off. And if you don't know what that is, that's basically where two single individuals come together and obviously they make a house, have some kids, all that stuff. But household formation has actually been lacking the last 18 months or so because of this crisis. And still, we are 5 million houses short. But if household formation takes off, again, demand for housing can ratchet up so fast and supply can't. It is a big deal. Number three, we've been given the gift of low rates. Don't ask why. I've given up trying to figure out how rates can be this low. And if China's market really does implode, as it really could, we could have even lower rates, but I'm not calling for that. I just can't, I don't know how banks make money at this range, but we will have low rates for longer than we should. And then four, rent is going to go up. Rent is going to go up, which again, my experience, as I've said, values race first, rent goes right behind. A couple other things going on kind of in the business world. Business world is Blackstone. Blackstone was making a $3 billion play for a China developer. What was it called? I think I wrote it down. Soho China. Apparently, Soho China started in the 90s. They now have 1.3 million square meters of China real estate. It looks like Blackstone dropped out. They're like, we're not making any progress. Really what this, folks, is another sign that China is clamping down on wealth. This kind of feels like a series of dominoes that you know how it's going to play out. It's going to play out pretty ugly, but it's a decade or two in the future. Right now, the rich are scared. They're being attacked. They're probably looking for ways to exit, to remove capital. You're not getting new investments, which again, you won't feel the impact of that for years to come. But yes, you will have a likely more, I don't know what they're calling it, common consistency or something across the China economy. They are coming, they want to become the largest socialist country on the planet, from communist to socialist. It will have ramifications. This has been tested before in China as the number 2 economy. It's going to be painful, and it will take years and decades to play out, but it's going to be interesting. And then finally, it looks like Intuit is dropping $12 billion to buy a company called MailChimp. They are looking to expand into small businesses. Again, this is what companies will do as we kind of exit this cycle. They will take the cash that they've accumulated. They will take the cash they have from bond offerings and the like and stock sales, and they're going to start going on acquisitions bends. I think this year will be the year of IPOs. I think we are on record for IPOs. I think next year will be the year of acquisitions. So we shall see. So lots of stuff going on. Again, you can either fight inflation by cutting expenses, delaying purchases, or negotiating with your vendors, or you can do the work in my course, How to Get Started One Rental at a Time, link below, and get yourself 1, 2, or more rental properties. That's what I'm doing. I should be closing on a property tomorrow, a nice little duplex deal that should earn me about 10%. So I'm happy with that. Have a wonderful day, everyone. I'm going to start my series of phone calls today, producing content for you. Take care. Have fun. Bye-bye.